Welcome. Today we're analyzing MercadoLibre, often called the Amazon of Latin America. But that label significantly undersells what makes that company truly special. While Amazon dominates a relatively stable, developed market, MercadoLibre has built something far more impressive: a fully integrated digital ecosystem across Latin America's fragmented, volatile markets. A region with 428 million people, 20 plus currencies, and widely different regulatory environments. What most investor miss is that MercadoLibre isn't just an e-commerce platform. It's solving Latin America's fundamental infrastructure gaps. In a region where only 55% of adults have bank accounts, but 85% have smartphones, Mercado Libre created Mercado Pago, not just a payment processor, but a full financial ecosystem that's leapfrogging traditional banking. Their genius is recognizing that in Latin America, you can't have successful e-commerce without solving payments, and you can't have successful payments without solving logistics, and you cannot have successful logistics without solving trust issues. So they built all three. They feed into each other in a powerful flywheel most investors don't appreciate. As of Q2 2025, they serve 158 million active users across 18 countries, with 123.7 billion in gross merchandise volume, which is GMV. That's up 38.2% year over year. But here's what the headline miss. Their real growth engine isn't just e-commerce, it's financial services ecosystems that is growing at 63% annually, becoming the most valuable asset. So their integrated ecosystem, which is more than just an online marketplace. So let's dive into what makes Mercado Libre's model so powerful and why it's fundamentally different from Amazon or other e-commerce platforms. Most analysts focus on their marketplace business, but the real magic happens in their fully integrated ecosystem where each component strengthens the other. First, the marketplace with 205 million listing across 18 countries. It's the region's dominant platform. But unlike Amazon, they don't just take a commission. They have built localized experiences for each market: Mercado Libre Brazil, Mercado Libre Mexico, and etc. Because what works in Sao Paulo won't work in Buenos Aires. Sorry if I butchered any of the names. Mercado Pago, this is where Mercado Libre's genius shines. In Latin America's underbanked market, they've built not just a payment processor, but a fully financial ecosystem. Digital wallet used by 78 million people, which is up 41% year over year. As for their credit cards, with 8.2 million users, which is up 67% year over year. Loans merchandise totaling 4.8 billion annually, which is up 72% year over year. Prepaid cards, QR code payments, and even cryptocurrency exchange. Mercado Envios, their logistic network solves Latin America's fragmented delivery challenges. They've built a regional network that can deliver to 98% of urban areas in 3 days or less, something even Amazon struggles within the region. Here's what most investors miss. They aren't separate businesses, they're interconnected growth engines. When a user makes a purchase with Mercado Pago, they're 3.2 times more likely to return to the marketplace. When a merchandise uses Mercado Crédito, their sales on marketplace increase by 27%. This creates a self-enforcing cycle that's incredibly difficult for competitor to replicate. In Q2 2025, their payment volume reached 42.3 billion, which is up 58% year over year, now representing 43% of their total revenue and growing faster than their marketplace business. Their ecosystem approach is why they maintain 65% plus market share across Latin America despite Amazon's attempt to enter the region. So now let's look at their financials. So Mercado Libre's Q2 2025 results focus on what truly matters beyond the headline numbers. So we're going to be looking at total revenue, which is 3.12 billion, which is up 48.7% year over year. Impressive, but not the full story. So basically their revenue breakdown is marketplace, which made about 1.77 billion, which is up 34.2%. As for their services such as payments and credits, that made about 1.35 billion, which is up 63.1%. As for the advertising, that made 241 million, which is up 52.8%. And here's what most analysts might have overlooked. MercadoLibre's services segment now has 68% gross margins, significantly higher than their marketplace business at 52%. This shift towards higher margin services is accelerating, and it's fundamentally changing their business model. So the key metrics takeaway is their revenue or GMV, which is up 11%, up from 9.8% in 2023. As for the payment penetration, which is 76% of marketplace transactions, up from 68%. As for loan book, which is 4.8 billion, up from 72% year over year. As for their free cash flow is 842 million, which is up by 54% year over year. As for their free cash flow margin, and that is 72%, which is up from 23.5%. The critical trend, MercadoLibre is evolving from a low margin marketplace to a high margin financial services platform. Their payment penetration has increased from 68 to 76 in just 12 months, meaning more transactions flow through their higher margin payment system. Even more impressive, their loan book grew 72% year over year to 4.8 billion, but delinquency rate retained steady at 4.3%, proving their credit risk model work in volatile Latin America economics. Their financial services engine is now their most valuable asset, and it's growing faster than their core marketplace business. While most investors focus on MercadoLibre's e-commerce growth, their unappreciated catalysts could be driving insignificant value. First one being financial services as standalone business. MercadoLibre's payment and credit business is on track to process 165 billion in payment volume in 2025. That's larger than PayPal's entire business in Latin America. But here's what's missed. They're now offering their payment infrastructure to third parties. In Q2, they've announced partnership with 12 major Brazilian retailers to use Mercado Pago as their payment processor, generating 182 million in external payment processing revenue. This transforms their financial services from a marketplace enabler to a standalone revenue stream. At current growth rate, their financial services business could be worth 200 plus billion as a standalone entity by 2028. This second catalyst is the digital banking opportunity. While everyone focuses on their payment processing, MercadoLibre is quietly building a full digital bank. In Brazil and Mexico, they received full banking licenses and now offering checking accounts, savings products, and investment services. With 78 million digital wallet users, but only 22 million full banking customers, they have massive cross-selling potential. What's remarkable, their digital banking customers have 3.7 times higher lifetime value than regular users. At current adoption rates, digital banking could add 4.2 billion in annual revenue by 2027. And lastly, their third catalyst is the logistic network monetization. MercadoLibre's logistics network, Mercado Envios, is now handling 8.7 million packages daily across Latin America. But here's the overlooked opportunity. They're beginning to monetize their network externally. In Q2, they've launched Envios Pro, offering their logistic infrastructure to third-party sellers, not on their marketplace. Initial result shows 42% adoption among medium-sized retailers, generally 94 million in external logistics revenue. This could become a 5+ billion business by 2028 as they leverage their massive infrastructure investment. And these three catalysts represent a potential 30+ billion in incremental and annual revenue by 2028, a value not fully reflected in current evaluations, I believe. While the market price MercadoLibre as an e-commerce company, they've becoming a diversified digital e-commerce with multiple high growth, high margin, and revenue streams. Now, with all of this sounds great and all, but here's the thing. We gotta look at some risks that comes with MercadoLibre. So basically, of course, investing in Latin America has risks, as mentioned, but MercadoLibre has proven remarkably adept at navigating them. So let's look at real risks and how they're addressing them. So One of the risks is economic volatility. Latin America faces inflation and currency fluctuations. Argentina's inflation hit 290% in 2024, and Brazil currency dropped 15% against the dollar. But here's what they might have missed. MercadoLibre has built sophisticated hedging mechanisms. In Q2, they've implemented dynamic pricing algorithms that adjust for local inflation in real time, maintaining stable dollar-denominated revenue growth despite local currency volatility. Their diversified footprint across 18 countries also acts as a natural hedge. When one market struggles, other compensate. Second, regulatory challenges. Governments across Latin America are increasing scrutiny on digital platforms. Brazil recently passed new marketplace regulations, and Argentina's implemented strict capital controls. MercadoLibre's response, they're becoming part of the solution. In Brazil, they've partnered with government to create digital ID systems that reduce fraud. In Argentina, they worked with regulators to create compliant payment structure. Their deep local knowledge gives them an advantage over global competitors who struggle with regulatory complexity. Third is competition. Amazon and Alibaba had tried entering Latin America, but both struggled. Because MercadoLibre's localized approach is incredibly difficult to replicate. They've built separate teams, technology stacks, and businesses model for each major market. Amazon's one-size-fits-all approach failed to account for Latin America's fragmentation. They've never achieved more than 12% market share in any major country. MercadoLibre's deep integration with local payment methods like Brazil's takes an understanding of local regional preferences, create a moat that's proven insurmountable for global players. Lastly, their logistic challenges. Latin America's infrastructure is notoriously difficult, but MercadoLibre turned this into an advantage by building Mercado Envios, now one of the region's most efficient delivery networks. They've even begun selling their capability to competitors, turning a cost center into a profit center. What's remarkable is how MercadoLibre turns potential risks into competitive advantages. Their experience navigating Latin America's volatility has made them stronger, while global competitors retreat. In fact, their Q2 2025 results showed 48.7% revenue growth despite regional economic challenges, proving their model works in good and bad times. Lastly, we're going to be evaluating MercadoLibre using our custom valuation tool. MercadoLibre. So, as you can see, for the past, I believe, year, it started to stagnate. I think it broke the support. I believe it broke the support, which was around 2100. I could be wrong, but anyways, this is the story, and here's some bull cases and trend summary. If someone's interested, they can pause the video and look at it. And another thing I wanted to look at is key metrics. So this will tell us, like, some of the important things to look at when evaluating a stock. And as you can see, 4 out of 9 passed, and the one that fails are one of the shares outstanding, and they are diluting shareholders. Free cash flow yield. So yeah, a lot of this, some of the metrics don't look good. However, it doesn't mean the company is not worth investing. So let's look into some valuation as well. Actually, before we do that, let's see their revenue. Wow, it's been at a very fast trajectory. It's been growing at a very fast trajectory. Anyways, I digress. Let's look into valuation. Oh, this is a simpler. Let's go into advanced. So basically, like this tool, I'm just I've already input the values within the tool, and some of the things that these number, what I believe them to be based on my research and a lot of the information that I gather. So for example, for expected growth rate, so for 26, 37, and 46, for the reason I chose 26 for conservative, because this reflects slowing but still robust growth as e-commerce penetration increased from current 12.3% versus 22% in the US. This accounts for potential economic volatility in Latin America while recognizing there's still massive room for growth. As for their base, which is 37%, matches MercadoLibre's actual Q2 2025 growth rate of 48.7%, moderating to sustainable levels. This reflects their proven ability to maintain higher growth despite regional challenges. They've grown GMV by 38.2% year-over-year to 123.7 billion, and that's for the base case. And as for the optimistic case, which accounts for accelerating growth from financial services monetization, with payment penetration rising from 68% to 76% in just 12 months, and their loan book growing 72% year over year. And this isn't just fantasy, it's trajectory. So based on my research, our analysis showed MercadoLibre isn't just an e-commerce company, it's a self-reinforcing ecosystem where each component, such as marketplace, payment, logistics, strengthens the other, creating a growth flywheel most investors might have missed. As for discount rate strategy, the reason I went with these numbers is because most valuation models gets this kind of backward. Like in my opinion, they increase discount rates in optimistic scenarios, which is conceptually a bit wrong. I believe risk decreases as business matures and proves its model, which is why for conservative I went 11.5%, reflects appropriate Latin America risk premium higher than US tech companies, while acknowledging MercadoLibre's proven resilience through regional volatility. As for the base, I went with 10.7%, which is slightly lower than market average because MercadoLibre has demonstrated exceptional execution capabilities across 18 volatile markets. Their diversified footprints acts as a natural hedge. And as for the optimistic 9.8%, which is significantly lower as their financial services ecosystem matures, which is 68% gross margin versus 62% for marketplace. The business becomes fundamentally less risky. So that's why our risk analysis shows that MercadoLibre has turned Latin America's volatility into competitive advantage. Their experience navigating regional challenges has made them stronger while global competitors retreat. So now let's look at free cash flow margin and why. So the reason I went with these numbers because they reflect MercadoLibre's take rate expansion from 9.8 to 11%, a critical trend most analysts might have missed. This is just based on my understanding, so that's why I kind of went with conservative 12.6% accounts for continued investment in logistics and technology while recognizing increasing payment penetration. So as for base, I went with 13.2% because this reflects the self-reinforcing ecosystem effect. When merchants use Mercado Crédito, their sales increase by 27%, driving higher take rates. And as for my optimistic, I went with 14.3. This captures the full value of their integrated ecosystem where financial services, which is 68% gross margin, becomes the dominant revenue stream. So basically our financial deep analysis really revealed MercadoLibre is evolving from a low margin marketplace to a high margin financial services platform. This margin expansion is transforming their business model. So now lastly for valuation multiples. So for PE ratios, they are absolute value but relative to MercadoLibre's business model evolution. So for example, I went with 17x because market values them primarily as an e-commerce company. That's the current reality, I believe. And for 25, market recognizes growing financial service component, likely the base case. And for 30, market values them as financial services company with embedded marketplace. So that's like the optimistic case. And for price to free cash flow ratios, these reflects market valuation of their cash flow generation. So 15 times, so which is conservative view of cash flow stability in volatile markets. 22, which recognizing of improving cash flow conversion, and 26 is premium for high quality ecosystem driven cash flows. So overall, like our segment valuation showed like MercadoLibre's financial services business alone could be worth more than their entire current market cap within 5 years. These multiple captures that transition. All right, so now lastly, this is terminal growth rate. We're going to enable some economic cycle and bias detection as well. So we're going to run the valuation. And So, all right. So, if you believe in the discounted cash flow value, the assumptions that we made, based on that, it's currently worth 1,500. And if you believed in the base cases, then the stock worth around $2,300. And if you believed in the optimistic cases, then it's worth $3,300. And if we're looking at multiples, value range, then it's worth, from conservative point of view, to $688 for their base case 1,000, and for the optimistic one, $1,200. And these are just projected revenue, projected free cash flow, growth rates, and free margins, and for over the 5 years. And so next is sensitivity analysis. So this basically kind of like gives you like a growth rate over a discount rate. So let's say if we're considering that, all right, so over the discount rate of 9.8 and the growth rate of, let's say, 46, then the stock should worth $4,300. And unless if you believe in discount rate of 10.5 and the growth rate to be that, then we kind of are in the middle section of $2,800 and what the stock should actually worth. And lastly, but not least, this is like the summarization of all the data and kind of going through that. And this is kind of the buttons that we enabled are kind of like the economic cycle analysis, kind of gives you like the highlight of that. And the highlight is created using Federal Reserve economic data. And this one is kind of like detects if you have biases within the assumption that you made, or if you're kind of like overconfident or high. And then this is also uses Federal Reserve economic data as well. And this is the actual results of our analysis that, hey, if you, based on all of the assumptions we made and based on the mid ranges, so based on current prices, which is, I believe, 2000, then the stock is undervalued and it has an upside potential of 12.4%. And the confidence score is gauged using the Federal Reserve's and other data. So based on that, it is a moderate buy. And that's usually like, if you believed in the mid assumption. Anyways, so the bottom line is that these parameters work because they capture MercadoLibre's fundamental transformation from an e-commerce platform to a diversified digital ecosystem. The growth rate reflects their actual trajectory. The growth rates properly accounts for decreasing rate in optimistic scenarios, and multiples capture the market's likely revaluation as their financial services business dominates. This isn't just theoretical. MercadoLibre has proven they can execute in Latin America's challenging environment while building interconnected growth engines. The reason why MercadoLibre is a strategic addition to my portfolio is because its unique growth story. While most tech companies face saturation in developed markets, MercadoLibre is capturing the digital transformation of Latin America's 428 million people, a market where e-commerce is only 12.3% of retail. This represents a $500+ billion opportunity they're uniquely positioned to capture. And the second is economic advantage. Their integrated marketplace payments and logistic create a self-reinforcing cycle that's incredibly difficult to replicate. Competitors must win on all three fronts simultaneously to challenge them, something no global player has managed. Third is their financial service flywheel. This is a hidden gem. Their payment and credit business is growing faster than their core marketplace and has higher margins. As their segment matures, it will transform their business model and valuation. Fourth is their resilience through volatility. MercadoLibre has proven it can thrive in Latin America's challenging environment, growing revenue 48.7% in Q2 2025, despite regional economic headwinds. Their diversified footprint acts as a natural hedge against country-specific volatility. And lastly, compelling valuation. At current levels, they're priced for continued growth, but with room for upside as market recognizes their financial services value. Basically, my valuation showed a close to, I believe, 13% upside with significant upside potential in optimistic cases as well. So to remember, MercadoLibre isn't just selling products online. They're building digital infrastructure for Latin America's economic future. As the region's middle class expands and digital adoption accelerates, MercadoLibre stands to be one of the biggest beneficiaries. And that's why the best investments combine strong fundamental with reasonable prices. MercadoLibre has both at current levels. While it is not cheap, let's acknowledge that the growth potential diversifies the premium valuation, especially when considering the multiple high growth business with their ecosystem. Because of all of these reasons I've mentioned, that's compelled me to start a position in MercadoLibre. So I started my position around I believe $2,100, and I'm just gonna keep averaging it down until it becomes a 3% of my portfolio allocation. Anyways, I hope you guys found value in this analysis, and if you do, please continue to follow. Thank you for joining me for this deep dive into Mercado Libres. See you in the next video. Until then, happy investing.